Hi everyone. Today let's talk about my options portfolio. I'll start off by going over a couple of indices including the S&P 500, TLT, as well as DXY or the dollar index. Then I'll go over my Robinhood portfolio as well as my portfolio with Tastyworks. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as individual stock reviews every single week. So make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. Starting off with the S&P 500 here. I don't show this chart every week, but it's good to take a look at. This is the logarithmic chart on the monthly time frame for the S&P 500, going all the way back to the roaring 20s until current day. You can see we've been generally within this trend over time, and I expect that trend to continue. If we zoom in into the more recent time frames, you can see we've been on this trajectory basically straight up to a potential endpoint here of around 5,700, which would be right around the top of that trend line that we established here with the .com bubble. And if we get into that price range somewhere in August of 22, I think that's going to be basically the top, similar to what we saw here. You might see a few months of sideways price action, but that's really going to be the limit. And then we're going to see downward movement either back to this next level of support or potentially even lower. So understand this is still a bull trend. We're definitely in some kind of bubble, and my current endpoint here is 5,700 for the S&Ps. Let's take a quick look at the closer time frames on the daily chart here for SPX. You can see we're right at the top of the range of that shorter term channel we're in, as well as the ATR range. There's maybe a chance we hit up here at 44.40, which would be about a 1% move. But I don't expect that we're going to stay at this level, and I would expect a retest closer to this 42.50 or 4,300 level here in the next few weeks, if not a deeper retrace than we saw here in the middle of July. Moving over here to TLT, you can see we're right at the top of the range here in terms of ATR on the weekly chart. And if we do take a quick look at the daily chart, you're going to see a very similar picture right here at the top of that level where we were quickly rejected back down to the 8 EMA. And we're currently sitting just below that EMA. And I do expect to see a move back down to at least the midpoint here, if not even lower, down to the first lower ATR level, which would be a target of around 145 from current prices. So it's not a great time to get long bonds, and I do expect to see interest rates climb into the next week or two. Moving over here to DXY, you can see the dollar has been on a slight uptrend, which is quite interesting since stocks have also been trending upwards. And usually you see these two assets go in opposite directions. If you see the dollar going higher, then you should expect to see stocks either slow down or go down. But here we had the dollar going up and stocks going up at the same time. However, this range does seem to be tightening, and it looks like this resistance is holding pretty steady. And if this pinches, my opinion is that the dollar will go back down to around 91. Which wouldn't be a huge move, but it could accelerate stocks higher, potentially out of the channel that I mentioned previously. Lastly, before we move on to my portfolio, let's take a look at energy. This is XLE, which you can see has been trending down here quite a bit, from $56 all the way down to $48 currently, way at the bottom of that range. You can see this is becoming a bit of a downtrend here. It's currently sitting below the 9 EMA, but in terms of historical pricing, it's significantly cheaper than it was previously. Found a little bit of support here at $47 and a potential upward price level from here, which would be the highs in March of around $53.50 if we could break above this 9 EMA, which in my opinion looks like a much better trade than buying the overall markets right at the highs of that channel. Moving over here to my Robinhood portfolio, you can see I'm still long Pinterest here. Pinterest was down to around 29 cents and I should have been exiting here and I could have re-entered for a much higher price, but then it's right back down to 38 cents and I took an 80-cent credit for this, so could have made more money here if I was paying attention, but I wasn't, so still going to be a profit, but not as much of a profit as it should have been. Looking at silver, silver is down quite a bit from where it was. Could have taken profits here at 29, maybe gotten a fill around 30 cents. And since then, it's bounced up back to around 72 cents. And if we look at silver over the last month, you can see it's been trending down. This is in the expectation that the dollar is going to continue to rise and that bond yields could go down. But again, I don't believe either of those things. I think bond yields will rise and that the dollar is going to weaken here in the next few weeks. Next, we have American Steel. Definitely right at the lows here. Probably could have gotten out here at 41 cents and re-entered around $1, but we're back down to 55 cents out of an 80 cents. And I'll probably look to either exit here or look for a re-entry later. Next, we have DraftKings down at $1.10 out of a $2.90 credit. And you can see here, this was a rollout in time for a 10-cent credit, moving from $46 here on August 6th to $44 on August 27th. And then you can see my protection move. I put a little bit more at risk, $35 here versus $40. So I put an extra $500 at risk to move down a couple of dollars in terms of my option pricing. Otherwise, this has been a very good rollout in time. You can see basically rolled it at the highs and it's trended downward since then, resulting in a pretty decent profit. Lastly, here we have SLB. This has been really the biggest loser for me. I did roll this out in time for a pretty big credit, and I did roll it down here to $31. The problem here is that I have 2 contracts at risk instead of 1, which was a bit of a mistake and why this is such a big money loser for me right now. Seems like it's trending down and that I might be able to make a little bit of money here. But if we look at SLB over the past month, it's been trending down and it's currently sitting at $28.32. And over the past 3 months, you can see had a nice little peak here. Kind of looks like a little bit of a head and shoulders pattern. But seems like we might have caught a bounce, maybe get them up to a test around these levels around $31. And I'll probably look to exit there because it seems like the trend is going to continue down here for SLB. Even though the last year has been pretty strong, 5-year trend here is not great. Moving over to my Tastyworks portfolio, you can see just up a few $100s here in my Roth IRA and up to almost $40,000 here in my individual account, which is basically flat over the past 2 weeks, down $1,700 on the year, which is not great, but my IRA is doing slightly better at up almost $400. Looking at my individual positions, you can see I am long S&P futures, but this is basically a neutral position with only a 5 delta here. So I'll benefit most if the stock basically goes sideways, and I can benefit a little bit here from the credit that I got from this covered call, because that's basically what this is. I sold a call against a contract that I owned, and with the potential to sell it at a higher price. Next, I'm short the bond futures. As I mentioned before, I believe that bonds are going to go down, and that they're pretty overextended currently. Apple, I continue to stay long Apple. This is a poor man's covered call, and Apple has been on a tear recently, so definitely one to watch for. Boeing, this has been one of my bigger losers here at down $139. Currently sitting right on top of the puts that I sold, which would be a great position to be in if it was at expiration. But unfortunately, I have 26 days to go, and it's unlikely that I'll sit there for that long, but it might work out and I could make some extra money if it sat right at that 220 level. Chewy stock down at $75 to $70 for a 90-cent credit. Pretty bullish on Chewy going forward. And this is a little bit of a COVID play. So if we do go back into lockdowns, this might be a good one to watch out for. Disney stock, was able to get back in on Disney after the dip. Dollar Tree, one I need to really be exiting here soon. Profit on $106 potential. Ford, a little bit of a loser here, and I'll probably look to roll this out in time next week, but we'll see. Still bullish long term on Ford, but I might be stuck here at $15. And there's currently not a lot of credit to roll this out in time. Next, we have GDX in my IRA account, just a little bit cheaper way to play gold. I still think inflation is coming and that gold and silver will continue to rally once we see the dollar weaken over the next few weeks. Next, I have Match Group. This is a great play for me, down at $150, and they did have a strong rally into the end of the week, looking at $243 profit out of $533. If you look at the charts here on Match Group, there is a little bit of upside potential to around 170, maybe 175, but if we get anywhere near those prices, I'm going to be looking to exit and re-enter later. Next, we have Netflix, currently in a $50 profit out of $200. Might look to exit that if it rallies into next week. Then we have Realty Income doing very well into the $70 price range. If you watched my Realty Income video that I put out a couple weeks ago, this is basically my price target, maybe $1 more or so. But I'm at $194 profit out of $241, so I will be looking to exit that this week. PLTR, not looking great, down $40, but this is a pretty small position for me. May look to roll this out in time, get a bigger credit, but there is potential I could get assigned here. Simon Property Group basically sitting on my puts here at 125. Really need the stock to rally, but it's been sliding here over the past couple of weeks. There's certainly potential we could see a move back up into this upper level of around 135. If we get into there, that would be a nice point of exit, and I'm sure I would see some profits there. Vici rallied, couple of bucks profit. Might look to roll this out in time to collect a little bit more profit. And looking at the charts, that's not a terrible time. Maybe if it moved down slightly, but it's not a very volatile stock, which is part of why it's in my IRA account. XLE, definitely not doing well for me, as we mentioned before. Need that stock to rally, and I might roll this out in time a little bit here to get a bigger credit, as it's already down to 26 days. And then lastly, we have Yeti, down at $80, $50 profit out of 105. Definitely going to be looking to exit that here in the next week or two. One final note here, something that I'm looking for the next week is financial services. I think is one of the better plays on the board. Things like Bank of America, maybe JP Morgan Chase. Citigroup is okay, probably not the best. Goldman Sachs, bigger product here at $374 per share. But Bank of America is probably the best play on the board, in my opinion. And if you look at the charts here, you can see it's been trending down. But if we see interest rates go higher, that could trigger an upswing here in financials, which again, as I mentioned, is in line with my thesis, and at least you're trading something that isn't at all-time highs. Let me know down in the comments section what you think of my thesis, or what you think of any of my positions, or the next week in the markets. Definitely like and subscribe if you got any value out of this video, and hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.